Hello, hello. Welcome, everyone. Welcome, Rosalind, David, Kaidi. I like that name. James. Got a lot of James in our community as well. Not that that's a bad thing. Isaac, Greg. Welcome, everyone. Welcome to today's Q&A with myself and our VP of Enrollment, Mr. Bryan Phil, who's here with us right now. Bryan, could you give a wave?
Nice to meet everyone.
Hey, there you are. Beautiful. Thank you, my friend. All right. So, just to get the ball rolling, I know that we have still people settling in the waiting room, getting admitted right now. There we are. So, in the meantime, if you could, maybe in the chat, just type in where you're coming from. What city, what country. I'm personally from Poland, or I'm living in Poland right now. I'm actually Canadian. I'm here with my family in the beautiful city of Gdańsk. All right. There we are. Wyoming, Orlando.
We got Minneapolis, Florida,
Beautiful.
California.
Banff, Canada. That's representation right there. Beautiful. California, Brisbane. Beautiful. That's Brisbane from Australia. Mr. Samsung, SM, A5. Colorado. Yes. Beautiful. So we're certainly an international, a truly decentralized community, I see. Well, welcome, my friends. I am the DeFi doctor. My full name is Alexander Granvlevsky. I'm the head of education here at Decentralized Masters, and I'm one of Tan's partners. Welcome to this Q&A. We're just going to make sure that everybody gets logged in, and we'll get the ball rolling. All right, truly a global community.
A lot of people here in Florida. I'll be going there in a week.
Hey, are you in Puerto Rico right now, Ryan?
Yep. Yep. I'm in Puerto
Beautiful.
Rico.
Lovely. Lovely. Never been. But as you see on the pictures now, on the presentation, that's me on the left, head of education. And here is Bryan, just in case you have not recognized them on camera. He's looking a lot more dapper on the screen. Now, before we get into anything, I do have to make a bit of a disclaimer. This call is for educational and informational purposes only. Nothing I share today constitutes financial advice. I'm not your financial advisor. You should always do your own research and consult a licensed professional before making any investment decisions. Now, with that out of the way, before we get to the actual questions, because we will have a full, basically the majority of this session will be Q&As. So we'll be answering your questions about the crypto space, about what we present today, anything else about decentralized masters, of course. But before we get into that, I do have already a presentation set up for you guys, giving you value in this presentation, whether you ask a question or not, and we'll take it from there. So we're going to do a quick recap on where we are in the markets and our system for profiting, regardless of that, where we are in the markets, where we are in the cycles. This is just to get you a refresher, and maybe you'll think of some new questions as I'm speaking. Are we good to go, my friends? We good to go? Just give me a thumbs up or a yes, and we'll take it from there. I don't see any yeses, but thank you. Thank you, Dave. All right, Craig. Beautiful. Thank you. Thank you. Brian says yes too. I think that's a good sign. All right. So, the macro picture. Let's talk about that. A quick refresher on where we are and what we covered last week. I'm going to breeze through this so you can think of any questions that come up. First, the big picture stuff. All right. The US just crossed $38 trillion in national debt, added $1 trillion in 60 days. That is absolutely not normal. Also, the dollar lost 95% of its purchasing power since 1913. All three credit agencies downgraded US debt for the first time ever, and the Fed is stuck. Inflation is at 3.1%. They want 2%. If they cut rates, inflation spikes. If they don't, the debt spirals even faster. And this is not fear mongering. This is just math. Just think about that percent of your net worth that's in US dollars. Do you have a plan B if the dollar collapses? Meanwhile, we got BlackRock, JP Morgan, Citibank. They're all moving into digital assets. Larry Fink himself, the man who owns basically BlackRock, effectively called the portfolio manager of the world, is calling for the tokenization of everything. Everything is becoming tokenized. Everything is becoming digitized. The dollar is falling, so the money is moving straight into digital assets. And that's why we here at Decentralized Masters are going all in on the ABN system, our three-phase framework we use to see institutional level returns, whether the market is up, down, sideways, anything. So let's recap that. What is the ABN system? Well, phase A protects you, phase B pays you, and phase N multiplies you. I'll go through each one of these in more detail in a second, but the results that it's been pulling in for our members is pretty insane, and I'll show you a few good examples. I show you these to remind you what could be possible for you, but remember, there is no guarantee. These are crypto markets. First off, let's check out what Caroline had to say.
I watched a video of Taylor's and felt that it resonated with me. I thought, okay, he understands what I think could be happening in the world. And I was happy he organized this new company.
All right. So that was a very quick one, but basically she mentioned TAN. And just in case you don't know, so TAN is our co-founder with Salim. TAN is a CFA charter holder, and basically he constructed the ABN system based on his own principles that he learned as a charter holder. And then another one of our members who says he is here because he needs to multiply his money, take control, and become his own bank. And that's our phase B of our system. Let's hear what he says.
Well, they say crypto is like the Wild West. Well, no way am I heading out in the wilderness without savvy guides, even an army to protect me. So with Decentralized Masters, I now have a team of crypto experts who I can get guidance from. I'm here because I need to multiply my money, and I feel the best way I can do that is to take control of my life and become my own bank rather than just follow the crowd.
Interesting things he said. Okay, but what are the results? Well, let's go through one. We've had members like Bill up 932,000 using this exact system that we taught him. Let's move on to the next one. We have members like Jeff up $100,000 once again with this exact system, and especially taking advantage of that last phase. That's the N phase, the native markets. It's the most explosive one. He even 5x'd his initial investment with us. Jeff is a really nice guy too. We've seen people be successful very quickly, like David here, earning $27,000 in his first 2 weeks, almost completely passively. We've also seen members see success not only quickly, but recently. Look at the dates, my friends. This was just a few weeks ago. This is November 3rd. My goodness, we're already in December. So a month ago. Notice that he wrote that on November 3rd when the markets were red, yet he was thriving. He was doing very well, actually, in the markets. This is all to do with phase B of the system that we're revealing once again today. And it's why we love it so much. No matter whether the market is up, down, sideways, we can always profit. That phase B, by the way, is becoming your own bank. We'll go through that in a second as well. And the same thing with one of our members here. It's Andrew. He's earning 50% yield. Do you see what he also said? Great to be in it when the market is flat. That's the beauty of phase B. Once again, it pays you regardless of what the market is doing. And one last one, I promise, because it reveals something you probably haven't thought about. We've had Mark drop this review saying Decentralized Masters pays for itself just around 12 days ago. So within 12 days, he paid off his entire membership. That's because Mark used phase 3 of the system. We'll be revealing. The funny thing is, Mark was actually very skeptical about joining us. And then he paid off his membership within a couple of weeks. So this one is not only recent, it also is very quick and substantial for his gains. And this is the video that Mark sent us as well afterwards.
Hi, I'm Mark, and I'd like to give a testimonial about Decentralized Masters. I've been a part of this community for about 2 months, and I've already grossed $80,000 with the help of Tyler and Rodrigo, Filippo, Tristan, namely. Everything Tyler says, you pretty much have to go with. He's a genius. And I would not have been able to traverse this crazy ecosystem without Decentralized Masters. So thank you.
So some of the names that he dropped there, they are our mentors. They're experts in the field. They've been in the field for many, many years. And Tyler specifically, the man he calls a genius, he's our quant, as we like to call him. But he's our head of research. He basically analyzes the markets, finds gems, etc. We'll go through a few more interesting tidbits about him in a second.
Hey,
Now,
Doc, just so you know, the
yes.
sound when you're playing the videos is a little low, so you might want to turn that up if you have
Okay.
more.
You got it. You got it. I will try my best. I'm not sure if we have any more videos here, but do you guys hear me fine?
Yep, hear you perfectly. Thanks, Doc.
All right. Thank you. Thank you. So, why did I show you that video, by the way? The Trust Pilot review was enough. Or was it not? Well, no. There's something that you should know. On Trustpilot, we literally request our members to avoid sharing their monetary gains. Number one, for their own privacy. And number two, to avoid attention from the big institutions because they don't want us to teach you guys this stuff. But because you're here, I wanted to show you a few to see how effective the system really is. I could go on and on. As you see, there are over 550 reviews, verified reviews from our paid members on Trustpilot with an overall rating of 4.8. This is out of 5, which is one of the highest ones in online education generally. Not only in education, but especially for digital assets. Now let me run through each phase of our system really quickly. All right, we got phase A. What is this all about? Well, it's called phase A because we call it the all-weather portfolio. All-weather portfolio. The idea is simple. When stocks crash, bonds rally. When bonds fail, commodities surge. You spread your exposure so you're not wiped out by any single move. BlackRock, the $13.5 trillion asset manager literally says in their own white paper that strategic asset allocation is the biggest driver of portfolio returns. We just applied that same thinking to tokenized assets. Gold, traditional gold. You're paying 5 to 10% premiums over spot prices. Storage fees eating into your returns, insurance costs, and if you need to sell fast, my goodness. Good luck finding a buyer at a fair price. You're at the mercy of dealers who lowball you because they know you're stuck. Now, tokenized gold, you buy at spot prices. No storage fees because it lives in your wallet. No insurance needed. And you can sell it in seconds, 24/7, anywhere in the world. Same ounce of gold at a fraction of the friction. Complete control. No middlemen. No banks freezing your account. You own it. That's phase A. You become your own hedge fund.
Thinking of getting into crypto, I would highly recommend.
Ay, ay, ay. I'm trying to adjust the sound here.
If you think as a new person in the field of crypto, it's a steep learning curve, but it has positioned me well for the bull run. I can honestly say that some parts of my portfolio have increased 30% in the last 1 to 2 months. Other parts of my portfolio have increased 2 times in the last 1 to 2 months, all because of the assistance from Decentralized Masters. So highly recommended if you're thinking of getting into crypto.
All right. Members like Dr. Roy F. have doubled parts of their portfolio within just a couple of months. You can see here, Dr. Roy mentions parts of his portfolio with different performances. That's because of his all-weather portfolio allocation that we taught him to implement. Now we're off to phase B. What the heck is this all about? Well, it's becoming your own bank. This one, once you get it, you honestly can't unsee it. BlackRock made $16 billion last year just from management fees, not from picking winners, from charging a percentage on assets that they manage. And banks do the same thing. You deposit $10,000, they give you what? 0.5% interest? 0.1%? Maybe 1%. But anyway, it is cookie crumbs. Then they lend out your money at 7, 10, 20% even. They're the bank. You're the customer. Well, my friends, phase B flips that completely. You literally become your own bank. You take the assets that you already own and you put them to work in liquidity pools. Every time someone trades using that pool, you earn a fee, you earn a commission. Imagine you own a beachfront property in Miami, prime location. People want to be there. You can either let it sit dead right there in the spot or rent it out and get paid every week. That is exactly what phase B allows you to do. You transition to landlord. We're seeing members earn 10, 20, even 30% annually on stable coins. Just a reminder what stable coins are. They're basically digital versions of the American dollar. So they're pegged assets. There is no fluctuations in the market. You know, Bitcoin can go up 20% and down 20%. Stable coins always keep that same dollar value, $1. So market up, you earn. Market down, you earn. Market flat, you earn. Actually, funny enough, the more volatility, the more you earn. Because people constantly switch from crypto assets to stable coins and back and forth and back and forth. And you're simply the middleman right there earning commissions because you allow traders to use your assets. That is the whole point of phase B. Now you've become your own bank. All right. So this is what one of our members, Frank, is using to earn 70% returns on assets that he already owns. Or Joseph, also earning 30% on his own money after following everything that we said to a T. or Travis, who is earning 112% on average per year. I could honestly, I could show you many, many more screenshots just like these ones, but I think you guys got the point. All right. Now on to phase N. We tried to come up with ABC, but just native markets does not have a C in it. So this is where the big multipliers come from. Most people buy on Coinbase, but here's the big but. By the time something hits Coinbase, is listed for the first time, the early money has already been made. What's that mean? So here we have Caspa launching at 2/10,000ths of a dollar, all the way down on the left side there, right? And it hit 20 cents before Coinbase listed it. That's 1,000x that you missed out if you didn't buy on Coinbase. Coinbase listed it in February 2025, and it dropped 50% within 3 weeks of listing. Suspicious. Let's go on to the next example. Here we have BitTensor, the Tau token, 20x before Coinbase, then dumps right after listing. The pattern keeps repeating. Native markets are the pre-Coinbase market, where assets trade before mainstream exchanges even pick them up. And as I mentioned before, our local genius here, we have Tyler, our head of research, calling these plays for members. His track record was audited by a German wealth management firm managing multi-millions, and his track record is nothing short of honestly being insane. Okay, check this out. And remember, I know it's hard to believe, but this is a third-party audit from a company from Germany. 508 total picks. I believe it was over the span of around 2 years, a little bit over 2 years. And here's what the independent audit found. 87.6% of tokens increased in price by more than 20% after he called them. 575.86 average return when measured to all-time high. Tokens that went 10x, 20x, even 100x or more. That's right. 99.61% of his calls increased in price after he made the call. He truly is a quant. 87.6% increased by more than 20%. When those peaks hit, average gain of 575.86%. Average time to all-time high, 101 days. Pretty interesting. Pretty impressive, to be honest. And here's the audit by Conquest Investment Advisory AG. And these are all their statistics that they showed. Now, most of these plays were found in the native markets, that phase N that I mentioned just before this. And the crazy thing is, these opportunities can still play out in a downturn. This is what we've recently seen, like literally in the last 2 weeks. 230% on Edel, 38% on Yoldo, 31% on Timmy, and 303% on Tradur. From the time that he calls them to what happens after. And we see a lot of, a lot of interesting plays that Tyler called out recently. All right. So, putting it all together in a nutshell, what is the ABN system? Phase A, you're diversified and protected. Phase B, you're earning passive paychecks on what you hold already. In phase N, you're accessing opportunities before they go mainstream. Each phase feeds the next, and it works whether the markets go up, down, or sideways. That's the recap. Now, I'm sure this sparked quite a lot of questions. Maybe something didn't click. Maybe you want to go deeper on any of these phases. Maybe you've got a specific situation that you're wondering about. So, if you have any questions about our program and what it actually means to be a Decentralized Masters member, that's exactly what this Q&A is for. So, without further ado, please feel free, drop your questions. Oh, I see the chat lighting up already. My goodness, thank you, thank you. Feel free, drop your questions, and I'll go from the top. From the first question, I'll just start reading on the way down. Anything to do with Decentralized Masters memberships, or if you're interested on joining, absolutely, Bryan will be able to help us out here. However, anything to do with crypto, I hope I can certainly add value to the conversation and answer you back. All right, such a big piece that a majority of crypto investors don't take advantage of. Thank you, Bryan Phil. Okay, so you have mentioned the great upsides, 100%, 200% returns in 1 year, 2 years. Tell us about some of the downsides. What percentages have DM clients lost over X period of time? And can stop losses be used to limit downside? That's a great question. Thank you, Harry. So absolutely. We start everybody off from the fundamentals. And basically, the entire curriculum is organized in steps. So we make sure that you know the essential knowledge before you move on. There are 5 steps in the curriculum. Once you complete the 5th step, you're able to basically go through all 3 phases, the A, B, the B, and the N. You're able to execute. The videos show you the theory, and then you have live sessions spread throughout the entire week. We have 52 live sessions that you can jump into for any particular step that you're on and get direct help from the mentors. Now, once you finish step 5, people think, my goodness, that's already a lot. I've already deployed my capital. I'm already making yields. I'm already the bank. What next? Well, that's when we go into the advanced sections. Now, the advanced sections exactly go through how to set up stop losses, how to analyze charts, how to set up indicators, how to use all the tools and services that are available to us for free to apply the methodology so you get a little bit more confidence in any maneuvers that you do independently. Of course, our mentors are here as well to answer any questions. If you want to ping off 3 mentors to get second opinions, that's exactly what we're here for. Now, you asked the question here, tell us about some of the downsides. Yes, crypto is volatile. And if you're not careful, if you're not applying the methodology and the teachings that we teach, then you could have exposure to a downside. I mean, just even recently, in the last 3 weeks, we've seen Bitcoin come down quite significantly. And if positions weren't set up properly using the ABN system, then you could have had exposure and you could have lost a certain percentage of value on your position. But there are many ways to prevent that from happening.
Yeah, and Doc, to add to this, so Harry, we don't manage our members' funds, so we don't have access to everything they invest in and what losses they have. That would be against what we're about, and you should always be the one holding your assets, not giving up control of your assets. So for you, I mean, the biggest thing is just seeing all the reviews, all the testimonials, all the wins we have, and just sharing, like Doc went over, our third-party audit results of our gems. And that's just a track record of what we share with the community. And that's up to you, Harry, to decide which investments you want to get into. But our track record speaks for itself as far as the wins, the testimonials we have, and all of that. And of course, you can use limit orders, and we talk about all the different strategies to help hedge on the downside, to deal with the volatility. And the biggest thing with this opportunity is the volatility is your friend. If you know how to manage the volatility of the markets, that's really where the big opportunity is, and where we are in the current cycle with all of the uncertainty out there. You can watch what the institutions are doing. They're acting completely different than the regular
Retail
investor.
investors. That's true.
So we have our system in place to be able to take advantage of that volatility. And that's why we have a really good track record. But of
You
course,
made
we're not going to get all winners. That would be unrealistic.
Yeah, Brian, and you mentioned something very interesting that I didn't mention myself. So thank you for that. And that is hedging strategies. Hedging strategies are part of the advanced material that we do teach. So generally, what hedging is a bet on the direction of the market. If you say, I'm going long, that means you're predicting that the market is going to go up, that there's more liquidity that's being poured into the crypto space, and prices are going to go up. And you can even leverage some of those positions. So 5x, 10x, et cetera, et cetera. Increase the amount of value of your position while doing that. Now, mind you, leveraging is not recommended unless you're a very experienced trader, but nevertheless, those are strategies that we do teach. So these days, as the markets were going down, we were hedging in two directions. Number one, we're still creating safe yields from our stablecoin LPs, yields that just basically passively come into us, increase the position size to begin with, because most of these yields, they actually compound into your initial principal. And secondly, you can have these strategies that are a little bit more advanced where you're betting against the market. No, I think Bitcoin's still going to go down by 3,000. This is my limit order. This is when I set up my position. This is where I set a stop loss. Hey, if it goes in the opposite direction against me, I'm only going to lose 3% of my position and then I'm out, et cetera, et cetera. But you can make massive, massive gains in that way too.
Yep. And Roy's got
Can
a question. You get a copy of the independent audit. What we could do is you could just connect with the membership director you spoke to. They'll share the screen, walk you through it live. You can ask as many questions as you want. You can dive into it. The reason we just don't send it out to everyone is because it has all of the picks that we do up to date. So we obviously don't want to send out all of our good access for free, but we'll be happy to walk you through it and show you all the details and answer any questions you have around the audit report. So be sure to connect with your membership director that you've been speaking to about that. Doc, next question we got.
Yep. So we got Harry again. Any asset, whether digital or hard asset, can go up or down sharply in a short period of time. You're absolutely right. Always has the potential to go in the other way in a short period. What amounts have some people lost? What is the downside risk? Can shorting be used? Can stop losses be used? So we do not manage anybody's portfolio. We do not look at people's portfolio positions, how much they're putting into the market, how much they're making, or how much they're losing. It's only through testimonials that members freely choose to actually write to us about or send us videos that we find out this information. Yes, there have been hard crashes where some people lost some money, but the absolute majority is if you implement the ABN system, you are protecting yourself against volatility. So you don't lose that type of money that some of these extreme fringe cases have happened. Now, when it comes to downside risk, shorting, and stop losses, absolutely. Once again, it's all in the advanced material. After step 5, how much does each phase cost? Hey, that's a great question. Maybe Brian, you take this one.
Yeah. So again, we have a lot of different levels we offer of access, from free groups for people that have less than 20K liquidity, all the way up to, if you want to work directly with TAN. So as far as the complete program, we don't break apart the system because the system is the most important piece. If you don't have every single lever of the system, it's really not a system. So we don't hold any of that back. You get access to every piece of the phase Doc talked about. So the A, the B, and the N. It all works
Correct.
together.
Correct. The only cost, just to be fully transparent, is to join us, to have the expert advice given to you from our mentors, to get direction from the educational material that we provide, to have a community that can also help in stirring out interesting topics of discussion with like-minded individuals. We talk basically, talk, breathe, and live crypto and the DeFi space 24/7. And we're a huge company. We have 136 employees now, and there are experts in their own fields. We have a group of analysts that basically look at numbers and track exactly what assets are doing. We have mentors that are front facing. They're the ones that apply the knowledge, that share their knowledge and considerations and education, and try to help you apply any of that theory that some people have hurdles with. Apart from that, there are no additional costs. It's once again, as Bryan mentioned, not your keys, not your crypto. And we believe very strongly in that philosophy. We help you set up your own wallet, but you do it on your own. Your secret recovery phrase is in your own hands. Nobody ever has access to it. Nobody ever shares that information, and we make certain that security is the utmost strongest pillar in this entire educational curriculum. We want you guys to be safe. We want you to be smart, and we want you to win as well, to succeed as we as a company have
Yep.
using these strategies.
There's a few questions that are duplicates around fees, cost, trial period. We don't have a trial period. We offer a ton of free resources. You can see the value we provide. We have a free group, docs all over YouTube. We like to have these calls. You've probably, spoken to our team, because we have a lot of resources that we invest on our side that we have to put into you guys. So we really want people who are committed and are going to level up the community. As far as the cost, it really depends, and that's why you should speak to the membership director directly, because it depends on really the capital you have, the level of knowledge you have, and the type of access you want, to really figure out what's going to be most beneficial for you and really what you're looking for. So if you want to get, really figure out what's the best path, that's where you want to connect directly with one of our membership directors. And what I can do is, if you haven't already spoken to someone on our team, I'll drop the apply link so you can apply to be a part of our mastermind and speak directly to someone on our team. So I'll drop that in the link. But if you've already spoken to someone, just reach out to them directly. That would be the fastest way for you. Jerome, you already did it. So it's dm-apply.com.
Beautiful, beautiful. Thank you, Bryan. Yeah, the range is huge, and as Bryan mentioned, it really depends on what you're looking for, what type of mentorship you need. If you want to speak to Tan directly, obviously the cost is going to be a little bit higher than if you
If
just
anyone
want
has
to do this
six
independently.
figures that want to work with Tan directly,
It's an option, but I mean, it really is your choice. Just to give you a general idea, because Tana has mentioned this before as well, the range is between $47 and $75,000. So it is a massive amount of options that you have. It just depends on what best fits you. Uh, Kaidi, thank you for your question. For the Be Your Own Bank, that's Phase B, would we need to move some of our existing cryptos into stablecoins? Are these still stored in our decentralized wallets? So, to answer both of your questions, excellent questions, by the way. Absolutely, they are still in your decentralized wallets, your Web3 crypto wallet. That is where your crypto is held, and that's where these strategies can be executed. Now, LPs come in all sorts of forms and sizes, if you will. There are over 18,000 LPs that are out there. Liquidity pools, by the way, LPs, just in case. And that is where we can basically set up a position in order to become that middleman. So, as an example, let's say we hold ETH already and we have some stable coins in our wallet anyway. We can merge those two because it usually requires a 50-50 ratio, 50-50% ratio to set up a liquidity pool. And then as a trader comes in, they say, hey, you know what? I want to sell my ETH and I want to get some USDC back for it. I'm selling it, right? So you are the middleman. You are allowing that request to be performed. Your USDC drops down by the value of how much the trader is asking to sell their ETH, and the amount of ETH that you have in that liquidity pool then doubles. So now you have 100% in ETH in that position and zero in USDC. But because there is an incentive for both the protocol where the liquidity pool is held and the entire blockchain, which also sponsors these protocols to show up, the next trader that is set up wants to do the exact opposite. Hey, I want to purchase the entire amount that you hold in USDC in ETH. So then your ETH basically drops to zero and your USDC doubles. Now, every time there's such a swap, by the way, there's literally thousands of trades that happen for your liquidity pool within 24 hours. And you can, at any point in time, click two buttons and relieve your funds out of that liquidity pool. There are no barriers, there are no penalties. It's basically tracking you in real time, and you get a commission per trade. And that commission ranges depending on the assets that you're using in that liquidity pool. It ranges from 0.5% down to 0.05% for stable coins. So the more popular ones, or the ones that are more easily accessible, they usually have lower commissions, while the more, let's call them exotic ones, are the ones that have higher commissions. But effectively, the liquidity pool, the protocol that holds that liquidity pool, is incentivized to set up as many trades as possible because they get a commission too. You get 96% of the commission, 2% goes back to the blockchain, and the rest goes to the protocol itself. This is what runs the entire system. And you're just sitting in the middle, holding the same assets that you would have been holding anyway in your wallet, not making any money, but now you're making 30, 40, 50, depending on the assets, in percent of yield.
This part of the strategy, this part of the strategy right here is really why the big institutions are coming to crypto. This is why BlackRock, Fidelity, Wall Street is here, is because of how much money they can make on the fees. They don't really care as much about crypto. They care about how they can make so much money on the fees. And that's why Coinbase and all these centralized exchanges are some of the most profitable businesses out there, because they're collecting fees. It doesn't matter if the market goes down. The market could crash. We can go to a bear market for a year, or the market could go into an explosive bull market. They don't care. They're going to make money either way. And that's really what this part of the strategy is designed to do, that if the market's going down, if the market's going up, if it's going sideways, we're able to continue to make fees on these transactions. And the perfect example is real estate. Like, I don't know anyone that buys residential real estate as a rental and then leaves it vacant. You know, they always put tenants in there. We're doing the same thing here. We don't want to leave our property vacant. We want to put it to work and start earning that additional fees and cash flow.
Yeah, excellent analogy. Yeah, I mean, even if you look at Coinbase has started some incentives. And if you look at what they pay you in terms of interest, pardon me, that's family calling. If you look at the interest that is coming, my goodness, from Coinbase to hold your crypto on their actual platform, you'll notice that it's between 2 to 4% on average. Why is that? Well, that's great. It's 4%. Is it? We went through the numbers today. You got inflation, which, oh, by the way, those are the official numbers, 3.1% to 3.4%. Okay, great. But unofficially, we know that that basically is triple. You go to look at the cost of food, the cost of gasoline, the cost of living, it's much, much higher. But anyway, why are they giving us 4% to begin with? It's much better than bank, right? Well, because then they're taking your own assets and going to the decentralized space and applying the same strategies that we're teaching. And then you can make 15, 16% on stable coins, and then ETH and all of these other altcoins and more exotic ones, much, much higher percentages. They're just basically taking the lion's share of that profit using your money. And I mean, I don't want to really put the cherry on top here. Have you guys heard of FTX? Any centralized exchange basically is a bank. It's just under the muse that it's a crypto related space platform, but in the end, it's a bank that holds both fiat currency and digital assets. Now, in the end, if you, let's say, Coinbase, I mean, knock on wood here, but let's say Coinbase goes under, they go bankrupt. What happens to your crypto? Well, you could say, well, wait a second. Well, it's my crypto. I'm just going to, withdraw it. Really? Is that what happens when a bank becomes insolvent? No. The bank then has an investigation. FDIC comes in. They rate the bank on how good mortgages they gave out, what types of clients they attracted, where they invested, what kinds of silly maneuvers they made to make the bank insolvent. They should be making massive amounts of money. That's exactly what happens with Coinbase. They won't give you back the money, and you can't take it back because you don't have keys. You don't have your own crypto wallet in Coinbase. No, you have a login. You have a little email and a password, pressing enter, with two-factor authentication, super secure. Really? That is not your crypto. That is basically an IOU to what you are owed by Coinbase, just in case something goes sour.
Michael has a question. With zero experience, can I learn how to do this and have success? Michael, a majority of the people that come into our space are beginners. And that sometimes it's better to have zero experience because you could start with the right information versus we have a lot of people that also come in with a very large portfolio of assets that are not stuff we would recommend holding, and they're attached to them. And sometimes they will continue with those assets, which isn't a good move. So sometimes actually it's probably better off to start as a complete beginner and be taught the correct system that we teach here from the start. Doc, would you have anything to add to that?
No, I honestly, I completely agree with you. We always teach people, even though they could have a wealth of experience of being in the space from scratch. Well, honestly, I'll be fully transparent. We actually force you to go through every step one at a time. There are actual hurdles. You have little tests at the end of each step to reinforce that we know and that you know that you understood the theory and that you can apply the theory. And if necessary, you always have mentors there that will help you apply it, that will help you move forward to understand the material. So every step has those hurdles for good reason. And even if you're experienced, you are forced to go through to understand exactly the fundamentals from many of the experts that are in this field that are part of our company.
Yeah, and one of the biggest challenges in this space is there's so much noise out there. There's so many people on YouTube, Twitter, everyone's shouting, completely opposite viewpoints and things to do. It just creates a ton of confusion. And honestly, a majority of what they're saying is stuff you probably want to run the opposite way. So one of the most valuable things about getting around the team and a group of mentors is really just eliminating all the noise and giving you that solid blueprint to work with. Another question from Ram is the access to native markets only through you guys? No, it's not. Everyone here can access the native markets with or without us. The problem is knowing where to go, how to do it safely, how to do it properly. That's where our team comes into play. But this isn't our software or our specific markets. This is decentralized. So everyone here could access this opportunity by themselves.
Yeah, on a
Doctor,
global scale, I'll just add a little bit more to that. One of the main reasons why we emphasize phase N is because there is, once again, I'll use the same words that Bryan used. There's a lot of noise out there. Everybody's shilling their own bag. Why? Because there are on average 11 to 12 tokens newly released on a daily basis. We are at now around 10,000 tokens that are floating around, and they represent different projects, different derivatives, different assets, tokenized assets. That's a field in itself, et cetera, et cetera. So it's very difficult to pick and choose really the winners, the gems as we call them, from all the garbage that's out there. Because it costs around $15 to create your own token and release it. So which one are you going to choose? Are you going to choose, gamble and pick and choose something that an influencer on TikTok has mentioned? Or are you going to do your due diligence? You have a methodology to do the research, to check the team, check the tokenomics, check the supply, check the vesting periods, et cetera, et cetera. And then understand, well, wait a second, all of these are ticked with a yes. So this gives me a lot more confidence to actually choose this gem over the many others that I've looked at. And this is why on a weekly basis, we have our quant, Tyler, that you guys saw before, who actually does his analysis in real time on around 5 tokens per week. We probably send them, myself and the mentors, probably 50 tokens. Hey, check this project out. Check this project out. And he curates them and he goes garbage, 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 garbage. These 5 are good examples to showcase. And to be honest, in those sessions, he sometimes actually showcases the really bad ones in order to help you identify the red flags, in order for you to be able to differentiate the good ones from the bad ones. Right. For phase B, are there tools that you have developed to use, or do you use tools that others have developed, like Metrics or DeFi Buddy? Great question. We have developed our own tools. A lot of them are SaaS products that are independently basically driven. We have poured in a lot of time, resources, and money in order to build them up. We even have our own proprietary crypto wallet. Absolutely not mandatory to use within this program. It's just a side thing that you can use. And it's free, by the way, unless this is the proprietary part, you would like to assign a beneficiary. We're the first in the DeFi space to allow a crypto wallet to be assigned a person to also be a secondary manager. Just in case, knock on wood once again, something happens to you. What happens to your crypto? Does it stay in the ether? Does it disappear? Does it dwindle the supply? No, it automatically executes an action where the secondary person, the beneficiary, the estate planning kicks in. We double check what happened to that person. We need proof. It's verified by lawyers. And then that entire crypto wallet is then assigned to the new person. Oh, and on top of it, because a lot of secondary people or beneficiaries are not knowledgeable about crypto, if you choose that service, which is a subscription service, it's actually very reasonably priced. It's around $50 per month, depending on the capital that you hold there. You get a membership attached to it. So with us, with DM, because we want to know that you are going to be using those assets in a safe way as well. All right, let us move on. What happens when there are fluctuations in the underlying coins that back the DCF markets? All right, well, if there are fluctuations in the underlying coins, means there's volatility in the markets. And there are many, many variables that have to be taken into account on what is making those fluctuations happen, those drops in prices or those spikes. Whether it is the M2, the global liquidity, whether it is regulations, whether it is competitors that are coming out with a similar type of project, whether there's been a hack somewhere on the blockchain. By the way, there are many blockchains. There's around 285 blockchains. People usually think there's one, but there isn't. Bitcoin is one, Solana is one, et cetera, et cetera. But it's a whole ecosystem. And DeFi exists on many of those blockchains. So the first step is to investigate, to understand why this happened, why there's a surge in one way or another. Then we investigate a little bit deeper, looking at exactly what has happened with that particular coin or token. Coins, by the way, are associated to the native cryptocurrency of a particular blockchain, while tokens are basically any other crypto asset or digital asset on that blockchain. So that's a good differentiator. So, for example, vesting periods. Let's say there's a release of tokens into the total supply of 20%. Well, obviously, if there's so much new tokens that are being released, then that dilutes the value of that particular coin or token. So that makes a huge impact. Many variables, but we certainly cover all of them in the DeFi accelerator. Okay. Is the access okay? Thank you, Bryan, for answering that. Doctor, what's your personal earning track record with the DM system? My personal one. Okay. Uh, Not to get into too much detail, but let's just say the reason why they call me the DeFi doctor is because before going into DeFi full time, I was a physician. I finished medical school in 2004. I did my internship in Portsmouth, and then I got into an orthopedics program, and then I had an epiphany. I said, well, no, you know what? I want to go into a different direction. I want to apply my knowledge, but in a different form. And I went into education, and I was doing education. I had my own private career colleges in Canada, in Hamilton and the Burlington area for about 12 years. And right before COVID, I sold those schools. But already before COVID, I was in crypto around for 2 years. So, just in case you don't know, DeFi was actually birthed at the end of 2019. So, I was around 5 years before DeFi was even invented. I was already scouring around different blockchains, experimenting, typing code, et cetera, et cetera. And I got certified. I really enjoyed it. I understood the potential, the growth of the sector. And when I sold my schools, I basically went full time. Well, it was COVID. A lot of things were closed at that time, but that was my escape. I really dove in head first into only learning about the crypto space and this new developing field of decentralized finance. And at that point in time, there was still a lot of negative media about the crypto space being illegitimate, about, only used for illegal handling, et cetera, et cetera. But I saw something different. Every single bank was building their own blockchain. What the heck was that all about? If they're saying one thing on one side and then building it on the other side, it was a signal that basically it's inevitable that they will convert to this new system because it is much more efficient, trackable, much more transparent, much more effective on a monetary policy. The rails, the financial rails were already being built around 2018-19. That's the exact time. And then 2019 came around. DeFi was birthed. That was the first decentralized exchange was Uniswap that allowed you to independently swap one crypto token for another. And that basically spurred a million other services and tools that use DeFi as part of its, I would say, grounding. So personally, I am now full-time, not only employed by Decentralized Masters as the head of education, but this is where the majority of my earnings come from decentralized finance. No, anyone can access native markets. Thank you, Bryan, for answering that. iPad asks, so same as UBS, etc. You advise charge fees and we take the risk. Well, the whole point of education is to present things fully in a transparent way. Every single stock out there, every single crypto token out there holds risk. Heck, you can even buy a brand new car off a lot. And, there could be some risk associated to the car being a lemon. But the whole point is to educate yourself to understand how to differentiate the good ones from the bad ones, how to understand macro movements that apply directly pressure for markets to go up or down. Every 2 weeks, our own founders, Tan and Salim, they do a market investment summit. So basically, we look at the bigger picture. We take a step back and say, okay, all great and dandy, DeFi is thriving, et cetera, because it's constantly growing despite the volatility. But what is happening actually in the markets and why? Once again, because of Tan's background as a CFA charter holder, he understands numbers and pressures on a whole different level. And he explains it very well in a simplified manner so we understand as well.
Yep. And as far as the fees, I mean, our team, we look to hire and bring on the best talent, the best mentors, people that are really plugged into this space. So they're very expensive. So yes, if we didn't charge fees, we wouldn't have a business to help people and give people access like we do today. And I can tell you, a majority of the people in our company, we all live, breathe, and eat digital assets and all of this. And we're all, I wouldn't say all, but a majority of us are all invested in this space. And same as Doc, I've been through multiple cycles. I'm very heavily invested, and that's actually why I moved to Puerto Rico. So if anyone doesn't love all those high taxes that you have to pay in the US, Puerto Rico is a nice spot that you can get zero capital gains. So, you know, maybe you guys can check out the island life as well.
Good point. Good point. How much time in a day or a week should we dedicate for staying on top of these markets? What a great question. So we want to make things as simple as possible, but I'll be fully transparent with you. You do need to dedicate some time to the education. So I would say between 3 to 5 hours per week in total with educating through the independent videos that you watch at any time. Instead of going on YouTube and watching some garbage, you can go through one video. And we try to make them very palpable, where they're short, they're concise, they give you good, proper information, but as well, information on how to execute on some of these strategies. You consume that for 15, 20 minutes, try to maybe experiment with it yourself, and then you jump into live sessions. Live sessions are usually 1 hour long. So what I always propose, depending on the step that you're on, if you're on step 3, for example, you go into at least one step 3 session during a week. That's where they only talk about step 3, how to understand that knowledge, what those concepts were all about, different types of analogies, et cetera, and how to apply them. And once again, it's an open Q&A within those sessions. So tons of members just ask questions. Hey, you know what? I'm having a problem with this. I can't hook up my ledger to my crypto wallet, et cetera. And we show you exactly on the screen live how to fix those problems. But then there is as well the homework. Mentors these days, they want to make sure that members are continuing their process of learning, because life always gets in the way. People get busy, et cetera. So mentors, they say, okay, guys, this is what we learned today. Next week, I want to see you guys in step 4. And in order to prepare for step 4, this is what I want you to do. Here are a few questions. Here is something that you should research. Here is the video that you should watch, et cetera. That's how we keep people on track. That's how we keep people engaged, invested, and as well educated. So they're safe, they're smart, and they make the right moves. Do DM pool members money together to buy Bitcoin or any crypto from miners at a discount? No. Great question, though. So once again, what Bryan said before, it's fully decentralized. What we offer is education and direction. Any type of support that you need from us to understand how to navigate these markets, we give that. But in terms of us holding your money, holding crypto for you, managing your funds for you, absolutely not. We do not do that. We're not financial advisors. We're not middlemen using your money that you choose to invest, however much you choose to invest, that is your decision. So absolutely not. There are no fees that we get a part of from LPs or anything like that. Nothing like that. We are very transparent as well with which liquidity pools are best. I mean, we emphasize the fact that we should always diversify to get exposure with different types of tokens, different types of assets, and that includes gold, real estate, stable coins, and of course the more risky ones. Alts, Bitcoin, of course, that's a given, but the more risky ones like gems, yes, that is should be part of your portfolio, but we diversify. So even if you're holding, let's say, $3,000 in stable coins that you have, and you want to deploy that, don't put that all into one LP. Choose one, two, or three LPs. Three would be best. And each one gives you an average of around 15, 16% without a problem. If there's more volatility, they even jump up to around 30%, but it's always temporary. It's around 2, 3 months, and then they dwindle back down to 16%. But overall, I mean, 16% compared to whatever the banks are giving us these days, I mean, you know, it's a day and night difference. All right. I'm comparing DeFi to stock buying and selling. Well, yes and no. I mean, let's look at the numbers. Let's look at first the stock market. What is the market cap of the stock market? It's around $110 trillion. The S&P 500, $110 trillion is the market cap. Now let's look at the crypto market. These days, probably around three and a half, a little bit lower maybe. But nevertheless, since the biggest narrative in this cycle is tokenized assets, what that means is that now a portion of the stock exchange is actually able to be purchased within the crypto space, in the decentralized space. You can purchase Apple, Tesla, Microsoft, you name it, in the decentralized space, and you hold that token that represents that share of the company in your crypto wallet. Now, what are the benefits here? Well, obviously, you're liquid 24/7. 2 o'clock in the morning in your fuzzy green socks, you wake up and you're like, you know what? Mr. Elon really posted something on Twitter that irked me. I don't like his new mission. I'm selling the Tesla stock. Yeah, you can do it. Try that with traditional stocks. Hello, the bank is closed. Hello, you need to talk to your broker. Hello, you need to pay a fee to sell and to purchase, et cetera, let alone the management fees that are associated with it. So much more liquid, much more efficient, much quicker to execute. And at this point in time, most companies on the S&P 500 allow 5 to 10% of their entire stock to be tokenized. And this is just the beginning. So that's one sector. Then we have real estate, which is $330 trillion, and we have gold, $17.1 trillion. So the reason why I'm throwing all these numbers out is the fact that if we've started the momentum towards tokenizing real world assets, like I mentioned in the presentation today, BlackRock, the largest fund manager in the world, they're saying we're gonna tokenize everything. We want the entire world to be tokenized, basically, all assets to be tokenized by 2030. And they've got the ball rolling already. They've appointed specific entities to execute on tokenizing those real world assets, stocks included. So the reason why I threw around those numbers is to show the potential of growth of the crypto market. 3.5 right now, if we only tokenize all the gold, and Mr. Trump has said that, very often, to be honest, we're going to be tokenizing the entire gold reserve. Well, okay, that's a 5x already in the market cap of crypto, let alone the stock market, let alone real estate.
Yeah, the biggest thing is you don't get too many opportunities to be a part of, such a big trend like we have in digital assets. And digital assets is really disrupting every single sector, like Doc is talking about: real estate, stocks, uh, bonds. Everything is becoming tokenized and into the digital asset space. So with the stock market, you're still taking a lot of risk. A lot of the stock market prices are all inflated, so you still have to deal with volatility and the potential of losing, a portion of your principal with stocks. But with digital assets, the upside, we're still such very early innings here. So your upside potential is far, far greater. And to me, in the past cycles, there was a lot more uncertainty. Where we are today, you have institutions, governments, all are coming into this space. These are not short-term players. Institutions like BlackRock, Fidelity, they think long-term, they think 100 years. So they're here for the long term because they see the opportunity and how much this trend upside has to go. So you can look at what they're doing and position alongside them, or you could stick with traditional assets, which you guys know the type of upside you get because you've probably been investing in that space for quite some time.
Good point. Good point, my friend. All right. Harry has another question for us. Why do you call some coins exotic? They're called exotic because of the market cap. So basically, anything that is micro or a very small market cap is categorized as exotic, where they're a lot more rare to be held by crypto holders. And this is why they're usually much more volatile in their prices. They have massive price swings. If there's a new competitor that comes out that has the same utility, basically it could tank all the other coins that are in the same sector. So those are, ones that we try to stay away from as much as possible because most often they actually go down and fail. I'll just be honest there. So yes, so if you look at coinmarketcap.com, by the way, that's a great website. It's a free website open to anybody that just types in the address. And basically, you look at the market cap. It starts with Bitcoin, which is around, let's say, $2 trillion out of the $3.5 trillion that the entire crypto space is composed of. And just imagine the rest of the tokens that are listed there compose the rest of the value, the 1.5. So as I mentioned before, if there are 10,000 tokens, imagine that 1.5 now being divided by all the rest of the tokens. Now, they're not divided equally, of course. Just like in the stock market, there are the blue chips. So the blue chips are the ones that have higher market caps. They're the ones that have been through multiple cycles. They've already proven their utility, their worth, their revenue generation, because that's very important as well. So Ethereum is a great example. Solana, Hype, Binance, or the BNB coin now, et cetera, et cetera. So if you look at the top 20 to 30 coins, those I would say are mid-cap coins from the altcoins. So altcoins are basically everything outside of Bitcoin. And those are the mid-cap coins. Those are the much safer ones, the much more stable ones. Everything under that, yeah, you're looking into a little bit murky waters and you need direction or a methodology to actually investigate if it's worth to even investing yourself into any of those tokens. Okay. We are handheld with our sponsor. So the mentor there, depending on which tier you choose to enter into Decentralized Masters with, you have more direct, customized one-on-one interaction with mentors, or you have more cohort studies where we have question and answer sessions as we have right now, where there are several individuals and one mentor. He presents a little bit of a 10-minute, 15-minute lecture, and then he answers questions. So depending on what type of tier you would like to join with, that's the type of mentorship that you would get. Are there classes for those that work full-time on weekdays? Yes, we do. We actually opened up several sessions to be included on Saturdays. Our mentors are 24/7 basically. They're available. You can always reach out to them. But the majority of the live sessions, the around 52, I think we even increased it just recently to 54, is within the weekdays, but we spread them out over 12 hours during the day. So sometimes you can have sessions at 7 o'clock in the morning, sometimes at 7 p.m. It really depends what you're looking for.
Yeah, the biggest thing for us is really giving you speed to access, right? So you can hop in, ask a community question. You can shoot a text message to your mentor. If you want to hop in and speak to someone live right away, like Doc said, we have classes running basically, almost up to 12 hours a day, spread across the entire day. So if you wanted to
Yeah.
hop into any of those sessions, you can jump in and talk to our mentors directly. So that's one of the biggest pieces that our members love. And also looks like we have a member in here, Doc. James gave us a little
James.
shout out.
Hey, James. Thank you, my friend. Very informative and walks you through step by step. Well, thank you. Thank you. Great feedback. Happy to hear it. I'll track your progress, my friend. No pressure, but if you ever need me, just reach out, of course. Um, just above James, we have one question as well. Actually, two questions. How are mentors assigned to students? That's a great question. So, when you speak to the membership director, they basically write down notes, your profile, they create a profile, and then they send that to the mentors coach. We have one designated individual. His name is Anakin, a really smart guy who assesses based on that profile which mentor would be best suited for them. So that's our curation process. Uh, I'll be honest. Now, if there is a misalignment, hey, you know what? This guy is in a different time zone at all times, or you know what? The language he speaks is a little bit too complicated. I don't get his lingo, et cetera, et cetera. Well, the good thing is we have 11 mentors full time, and we can pick and choose one that suits your needs the best way. So yeah, that's always there. How long does the membership last after the first payment? Great question.
Yeah. So for this one, it's really twofold. So some of what you get as far as the community training and resources is going to be ongoing and lifetime. So you're going to continue to get updates to that, stay plugged into all the training and all that ongoing. So that's the one component. As far as getting the mentor access, we can't train people for life. It's just not feasible. It wouldn't be fair to all of our new members, and they would be not too happy about that. So as far as the mentor access, it's 6 months, and that's really the time we've seen to get people up to speed to be able to really do this on their own, know how everything works in the mastermind, and be able to take advantage of all of our resources from there on. So that's as far as the access there. And what I'll do,
Exactly.
if anyone wants to reach out to their membership director or apply, just let our team know that I gave you guys an extra month. So anyone that wants to take advantage of that, if you want 7 months of a mentor, just let them know that Bryan approved it for you. So that's a special thing for you guys hanging out with us and talking to Doc and myself.
Thanks, Bryan. That's very cool of you. Um, all right. Our next question is coming from Harry again. He's an active, very active in the chat. I like that. Main Street markets, Coinbase, Kraken, are regulated by the SEC, correct? Yes, they are. FDIC, FTC, and the SEC. Are native markets unregulated? Yes, they are, and for good reason. Now, mind you, I'll give you a little bit of context here. The majority are completely unregulated. That's the idea behind decentralization. Anyone can create a service or a tool that's accessible on a global basis to anyone without any middlemen, without any borders, without any rules that are opposing fair services to be available to any individual on the planet. As long as you have an internet connection and a computer, you can access these services. But the good thing is that the majority, and I'm talking about 99% of these types of protocols, they post their code on as open source. You can find them on GitHub. You know exactly, you can do a copy and paste of Uniswap. You can create your own decentralized exchange if you wish. However, you have to be very technical to understand exactly how to apply that, how to make that function. So I hope that answered that question. What's the second part? Do native markets have a fair inferior degree of safety to Main Street markets? No, I would not say so. There are negatives on both sides. There are potential risks on both sides. So the potential risk of something that is on the native market in the decentralized space is a potential code break, is a potential hack. Now, mind you, these protocols, they literally trade millions, if not billions, on a 24-hour basis. So they're in the business of making that 2% commission for themselves using billions of dollars on a daily basis. So just imagine the incentives that they have to make sure that that functions properly, is safe, that people don't point fingers. Secondly, when you compare that to Coinbase, I mentioned this before, all centralized exchanges, they function the same way as banks. Not your keys, not your crypto. FTX basically got liquidated because they were betting with customers' money of $9.8 billion. That's how much was lost in that one crazy maneuver. The CEO was in Bahamas doing crazy trades. That's why FTX went under. And what happened? Okay, yes, he got some jail time, but everybody lost their money. To this day, they are getting around 30 cents to the dollar. That's how much they got recovered. So there are two sides to it. If you are smart, if you're capable, if you know how to go through the education, reach out to the mentors, and then apply the knowledge, it is a much safer and much more accessible, I would say, environment to actually use the tools and services available to you. Is
Is
Tyler
Tyler
your...
only?
No, he isn't. So we have Juan as well, who's been a trader. Actually, he worked for Binance for around 6 years, but he's been a professional trader for 12 years. We've recently made a hire. I'm not sure if I'm allowed to say this, but in the equities market. But so basically, a stock trader, a professional stock trader who's only going to be looking at stocks because once again, we believe in the philosophy of diversifying your portfolio. It's not only, hey, this is crypto, this is a signal to buy, this is a signal to sell. Absolutely not. That's not what we do. We educate you to understand how to independently make any choices. And we as well give really good, thorough data to show what the patterns are pointing towards, what the probability of something going up or down is. We are math people. All right. Do you go step by step slowly? First step A, then step B, then step N. Absolutely. I mean, it's once again building on that the step system that the entire curriculum is divided into. Without knowing how to do step A, you're not going to be successful in step B or N, and vice versa. This is why we pseudo gate it so you don't jump ahead of yourself and hurt yourself in the meantime by misunderstanding some information. But we build on the knowledge that is solidly emphasized in the steps, and then you move on, and then you move on.
Yeah, and
If
you also do not have to invest in. You could avoid step N, phase N. We have a lot of conservative investors that don't even mess around with that, and they're very happy with the upside they're getting in A and B. So you don't have to. And we actually recommend only using house money for N because it's like early stage investing. You get really, really high upside potential, but it does come with higher risk. The one thing I would say is Tyler's track record is ridiculous in finding
it
these
is.
gems. So it makes you feel even better that when you use house money there. That's really about acceleration.
So true. So true. Yes, and certainly some of them skyrocketed like 10, 50, even 100x. But once again, in the A phase, we teach you how to manage your portfolio. And gems, or that phase N part, is only supposed to comprise 5% of your portfolio. So the majority is in safe, conservative strategies that are hedging against volatility, that is creating passive income no matter what the market conditions are, et cetera, et cetera. That is fundamental. And then once you make a bit of extra money using how to become your own bank strategies from the LPs, sure, we can kind of experiment in the phase end with it. Uh, okay, when you are saying that yields can be 40 to 60%, these can only be achieved by CLPs, and there are risks with CLPs. The tokens that you are providing liquidity go down, and impermanent loss is an example. These risks can reduce the yields substantially. What are the yields after the risks included? It's a bit of a difficult question. It's a great question, but it's a little bit of a difficult question to kind of give a general cookie cutter approach on how to not get hit from impermanent loss. So basically, what this question is asking is, if you're in a liquidity pool, remember what I mentioned, that we start off with 50-50 ratios of two tokens. And at one point in time, a trader comes in and they purchase one token, they reduce the supply of our own LP of that token and increase the second token supply plus the commission on top. Let's say, out of $200, you have $100 on each token. Now you're at $201. That's where you're trading with. Next trader comes in, they have $201 that they want to trade with, et cetera, et cetera. But what happens is that LPs rebalance themselves because they don't know what the next trader's motives are going to be. Maybe it's going to be only one token that is being sold multiple times in a row. And if that's the only trade that is being requested, then your LP will execute on that request. So meaning it rebalances. Now that $201 gets divided once again into two tokens. So impermanent loss basically is when there's a huge differentiation in value of both tokens. So let's say one token stays the same, but another token decreases by 20%. So we're at $100 here and we're at $80 here. The good thing is that impermanent loss is only hit on the value of your position if you remove your liquidity from that LP. If you do nothing with it, then it automatically rebalances with a hedged strategy built in. What that means is that as the prices dropped of the secondary token by 20%, you're purchasing at a lower price. So instead of getting hurt by the entire 20%, you're only going to get hurt by about 16%. And then it equalizes so both ratios are balanced. So yes, in the crypto market, there's volatility on most assets, except stablecoins. All assets go up and down in value. It's not only about timing, it's knowing how to set up your LPs correctly in order to mitigate that very violent swing. So just as an example, just a follow-up. So there are things called, there are ranges that you could set. My LP holds ETH and stablecoin. Stablecoin, we know it's $1 equals $1. That's it. But ETH, let's say it's $3,000 right now. And I'm willing to trade my ETH within a range of prices. I'm only going to allow it to trade between $2,800 and $3,200. And as that price of ETH is swinging between that range, you're constantly making a commission. You're allowing the liquidity pool to be used for traders. Now, the good thing is that if you don't set a range, the range is 0 to infinity. So meaning you're spread very thin. Let's pretend that instead of using the entire liquidity that's associated with the ETH price, you're only limiting it to about 20% if you don't put in a range. But if you put in a range, you're bumping that up to 60, 80, even 100%. If you put it at $1, I'm only trading at $3,000. 100% of your entire ETH is being used for trading purposes. That increases the yields massively. So the most sophisticated LP protocols these days, they have moving ranges. So you say, hey, I want ETH's range to be 10% of the current, 10% above the current price and 10% below the current price. So if the price of ETH moves, the entire range moves with it. Impermanent loss is basically squashed to very little at that point in time. Okay. How does your program protect against government's goal to digitize all bank accounts? They are very different motives. I mean, this is what we're warning people against about CBDCs, the FedNow project that is being pushed down everybody's throat. But it's going to take a bit of time before the federal government actually is able to execute it. They're in phase one of their plan. And phase one of the plan is to allow banks, number one, and this just passed around 2, maybe 3 weeks ago, that all banks are able to now purchase crypto on behalf of their customers. Interesting. Secondly, they're going to be including the ability for banks to create their own stable coins. So you're going to have Bank of America stable coins that are floating around. And that Bank of America stablecoin will also earn yield for the customer. This is how they're attracting new customers to choose Bank of America over whatever other banks are out there, right? So that's going to be the second phase. And then the third phase, fourth phase is a requirement of using government issued CBDCs because for any payment purposes. That is a complete separate subject than what decentralized finance is. Decentralized finance is the ability to, without any oppressive forces, governments, territories, et cetera, for you to still be allowing your liquidity or your crypto assets to be working for you on a global level. I hope that answered that question. Doc, you there? Yes, I am.
So a couple of people have a question around, if I was investing in the newsletter, what type of returns can I get? If I, had a crypto portfolio of 50 to 100K and followed everything, what would be the average annual return expected? For compliance purposes, we can't say, hey, you would get X return because there's so many factors. Just the factors of what are you actually going to invest in? What are you going to do on your end? What happens in the markets? Do the markets go up or down? So there's so many different factors. As far as the A strategy, it's about building an all-weather portfolio, right? Getting the right assets that you feel are going to go up and have significant upside, but also limit your downside. So it really depends on a ton of factors, right? For example, we have members with us for 3 years. And I forgot the exact moment Tan called it in our community at the bottom of Bitcoin of the last cycle. I think he was calling it at what, like 22K, Doc?
No, 16,000.
Okay, even better. So for example, if you bought Bitcoin at 16K and went up to 125K, just in Bitcoin alone, that's your upside. As far as what's going to happen in the future, we don't know the exact upside, so we can't give you specific amounts there. But then if you look at the B phase, as far as the annual yields, what we've been seeing on stable coins, and obviously past performance of the future, but it's been pretty consistent, is anywhere from 10 to 30%. And then the blue chips, you get even higher yield. So that's in the B part of the strategy. That's not even including the appreciation of the asset if it goes up in value. And then you have the N, and that is where we shared the audited reports, the audited performance of Tyler's track record. And in those assets alone, I mean, the track record is incredible. And we had many 5, 10, 20, even 100x type returns. So That's why, I wish we could say, hey, it would be this, but for compliance purposes, and there's too many factors to give you a realistic exact number. That gives you the ballpark as far as what we're looking at when you put the whole strategy together, if that's helpful.
Marlon, thank you for the kind comment there. I'm so happy that you're part of the DM journey with us. Uh, just above Marlon's comment here, I have two coming, actually three coming from Ankit. I believe I answered one, but let's go through the next two. What is the process of verifying contract addresses? I'll give you a good tip. Go to de.fi and copy the contract address from CoinMarketCap. Let's say you're looking at Aave, AAVE, right? You type in Aave in the search bar on CoinMarketCap, it brings up Aave, and on the left side, you have a bunch of information, supply, what's in circulation, et cetera, et cetera. But then there's a little, it says contract address, and there are different icons. And the icons beside those contracts identify which blockchain that specific contract is associated to with Aave. So, for example, on Ethereum, it has one contract. On Solana, because Aave is available there too, you have a different contract. And you copy the one that you're interested in investigating and then go to the website de.fi. And on the left side, you have a scanner. And this is one of my favorite scanners because it does a very thorough job on skimming through the contract, looking at bad code, skimming through the contract, finding if it's a honeypot, meaning you can purchase the token, but you can't sell it, or any other red flags that it identifies, and it gives you a score. Anything below 65, I would not touch. It's not worth it. There are too many fantastic projects out there to risk that. So that's a good way to verify contract addresses, but always verify them. Always verify them. Can you also talk about smart contract risks? Yes, there are risks. As I mentioned before, code can be changed if the contract is malicious to begin with. So once again, sometimes contracts are open, meaning they're not fully closed. They're not given immutable status on the blockchain. They're basically still editable. And therefore, people sometimes, or malicious projects, con people to purchase the token and then they change the code to block any sales. This is why it's important to have a thorough methodology. And we teach that in the program, of course. Yeah, that's the biggest risk, to be honest, when it comes to smart contracts. Smart contracts basically run the entire crypto world. Anything that you want to do, whether it's exchanges or LPs or this or that, you run it through smart contracts. Okay. Uh, my goodness, I'm sorry if we're talking for so long, but I hope you're enjoying this and getting some value out of it. Michael, I have a Mumu account. Is that sufficient for doing DeFi? To be honest, I have not heard of Mumu. Not saying it's a red flag right away. It's a funny name, but when we enter into the decentralized space, you need a good, solid Web3 crypto wallet. That's what it's called. You can search for many of them. My biggest advice is to stick with the big boys. Rabby Wallet is the one that we propose all members to use because it has a lot of safety checks that are built in. So basically, if you send funds to a particular crypto address, it double checks that that address is not a malicious one. It sends 1 penny from its own pocket to double check that that contract is not malicious, that the address is not malicious, et cetera, et cetera. It has these safety checks built in. It also curates the list of tokens that are in your crypto wallet. So if you've been around the block in the crypto space for a bit, as you hold a crypto wallet, just simply holding it, you'll see that every so often you get a new token popping up. Big bucks, token, or you're a millionaire token. And it's quite tempting because sometimes they have values associated to it. Hey, I just got $200. Fantastic. I'm going to sell it. That's the catch. That's the hook that they have. They give free tokens that are malicious. So then when you interact with your crypto wallet to try to sell that token, you expose your crypto wallet to possibly be drained. So be careful. So in 6 months, will we become as good as the quant on your team? That way we are 100% ourselves. I hate to break it to you, my friend Ram. It's a great question, and I applaud you for being so ambitious. But Tyler, it really is a bit of a genius when you listen to him speak. He understands numbers on a different level. He's been in the space for a good 12 years himself. He writes his own algorithms. He reads around 280 books, I think was his record last year. He's a speed reader. He has an endemic memory. So basically, he gets like pictures that he takes of everything he looks at and touches. Uh, he's in a league of his own. I do hope that you get to that level one day, but I think it's overambitious to expect that result in 6 months. But
Yeah,
you
that would
can
be
learn
impressive.
massively from him, massively. I learn every day from him, to be honest. And
That'd be
I'm
very impressive if you did. The good news is you don't have to be as good as him because he's going to share his research. He's going to be sharing his updates. So you could just take the easy route like I like to do and, just take in what he says and utilize that.
Marlon is writing, what's the price to continue with the mentorship after 6 months ends? The price to renew, because Marlon has been our mentor, a member. Bryan?
Again, it really depends if you feel like you still need mentor access. We got different levels, or you could just, stay inside the community and get the research and all of that. So it really depends on again, what you're looking for and just set up a call with the renewal director there.
How much time is really spent managing one's own portfolio once the mentorship expires? So that really depends on you, how active you are in the space, what you are doing with your assets, how you've set up your entire portfolio. We have several quiz questionnaires, if you will, that you have to go through as you're going through the steps in order to customize, I would say, the strategy on how to best not only manage but structure your portfolio. And that is a big, I would say, factor to take into consideration of how much time you're really going to be spending managing it. We have LPs that have been running, honestly, for over a year that are successful, they're stable, they're creating yields. People don't touch them. Other times, especially with the lower market caps, yeah, because there's volatility there, because there's an expiration for those micro caps, those tiny ones, those new projects. Um, it's better to get in, have gains, have that appreciation hit the value of your position, and then get out and then see where the project goes. I don't want to bash the native market gems at all. I mean, apart from Tyler's amazing track record, I would say the native markets are one of the most exciting things for me. Just imagine this is the way I see native market gems. It's like Kickstarter on a global level. You go on Kickstarter, you see like a new keyboard being created, and you're like, my goodness, this reminds me of my, 20 years ago, the good old keyboards. You heard the clicks every time you click a letter. That's the type of keyboard I want. And they have a campaign. And if you'd like, you can purchase that keyboard at a discount and basically fund the project, hence it being called Kickstarter. But what this does is it kind of gives you exposure to potentially the project not coming through. Now, because it's run through Kickstarter, they refund you directly. But you doing the same thing in native markets is actually even more powerful. This is an idea from someone around the world that says, you know what? I have an amazing idea on how to help people move money, on how to create utility or a service, anything, right? Anything that they come up with. And if you're convinced by this idea, this is an amazing idea. If they execute this, it could change the world. Then you can invest into it by purchasing the token directly. Now, what's interesting is that no, you're not receiving a service or a product, you're becoming the shareholder. You're literally becoming the shareholder of that project, of that company that is being birthed in the native markets. And as the valuation of that company goes up, VCs maybe come in and they dump $100 million. Who knows, right? The token price skyrockets. Well, you're the shareholder, so you as well get exposure to that appreciation. And you could sell at any point. You're not convinced anymore? No problem. 24/7 accessible.
Yeah, we were talking about stocks earlier, and if you look at where the biggest money is made in the stock market, it's coming from being an early investor in companies, right? Being a venture capitalist to be able to invest in the Tesla, Uber, Facebook when they were building before they were public. The
Yep.
beautiful thing about the native markets is you're able to invest in the ground floor of all these companies, all these projects. And you can put in $10, you can put in 20, you can do whatever you want. So that's what I love about it. And I see the native markets as really being an early stage VC investor in the digital asset world. So that's again, it's early stage. So that's why we also recommend, using house money because it's higher risk, higher reward type investments.
Exactly. Exactly. Independent of social aspects of the chat rooms for trading support, how much time is required to become and also maintain success with your testimonials? So I believe you're asking for the results that we showed you in the testimonials, how much time would be dedicated in order to get the same results? That depends. To be honest, that last testimonial that I showed you, I believe his name was Mark Alters. Mark Alters. He made around 80,000 on a gems pick, funny enough. And this was his first 3 weeks of joining us. He was skeptical. He was like a little bit, uneasy with certain things. He put in, I believe, $2,000. It went up to 80,000. And what he did a smart thing because this is what we teach as well. Ladder exit strategies. So as the token's price goes up, you pull out profits. You already are solid on your principal investment. And then as it goes up, you pull out percentages or portions of how much tokens you hold. So it varies. It depends on how you apply the knowledge, how much time you yourself dedicate, how you're able to absorb the concepts that we present, how much time you even reach out to the mentors and ask to have some questions answered. Explain, Marlon, thank you for asking. Explain how we can take money off the winner or gems as realized gains. At any point in time, you can sell. But of course, because we're picking and choosing the gems strategically using our methodology, as the price appreciates, you take money off the table. And usually there's a ladder strategy that we teach you how to apply onto a chart so you know exactly the price of where there's a resistance level that most probably there's going to be a bounce down. It doesn't mean it won't continue to go up, but at that level, you should pull off 30%. Then at the next level of resistance, another 30%, et cetera, et cetera. Gotta go, but as a person still investigating, I'd like to say that the Zoom call has been erased my doubt that DM is a scam. Thank you. Thank you, Joe. Love that. All right. How can I contact directly? Currently, I am being contacted by a salesperson who is robotic. Makes you look bad. We have to tone down maybe some of those automations, Bryan. So the best way, honestly, is to use this DM apply, kind of get a fresh start. If you do it through this application, you'll be reached out directly by an MD, and that's going to be your main point of contact from then on. Tyler is obviously a very integral part of the DM program. Seems a little bit risky for clients if something was to happen to him. What's the backup plan? Um, we certainly hope nothing will happen to DM, but our philosophy at DM is that we empower people to make their own choices. And we've had fantastic employees in the past. We've been around for 4 years around, and employees have come and they've gone as well. They've set up their own companies, they've grown their own products, et cetera, all types of walks of life. It does not mean that the philosophy and the approach to education, the high quality education that we provide, will decrease just because Tyler is not with us. I love the guy. I hope he never leaves. We certainly pay him enough for him to be motivated to stay with us. But as well, we have other mentors that are also quants. As I mentioned, Juan, we have the stock trader that's coming in, et cetera, et cetera. Apart from the mentors, by the way, we have a slew of analysts. I mean, the mentors themselves are not the only ones that only look at charts and look at prices because they wouldn't have time. So it's a truly a group effort.
Yeah, and the most valuable piece of what we do is really the system. And that comes from top down. Tan set it up personally, and he's trained all the mentors and analysts on how to operate the system. And that's really where the value is. We have a lot of research. We're very well connected in the space by being the leader in DeFi. So one of the most valuable things when investing in this space is access to the right information. So there's different types of ways to get information, and a lot of the best information comes from people that are building these projects on the ground floor, people that are fully involved in the native markets, in the digital asset space, because they know things everyone else doesn't. And that's what's beautiful about our companies. We're an international company, very well networked, and we just have an incredible team to tap into. So we hope we never lose Tyler. But we'll, our team here is incredible across the entirety.
So true, so true. Let's move on, my friends. What's your opinion, Doctor, on Tangent Wallet? Okay, so we do have one or two mentors that say that they've only had good experiences. Personally, I myself do not like it. So if you don't know what a Tangent Wallet is, it's basically a credit card that has a QR code and an NFC chip built in. I don't like anything that potentially could communicate with external devices. For example, a Tangent Wallet going through going through the airport, maybe somebody brushes up against you and has a decoder basically in their pocket that can scan NFC cards and pick up some valuable information that they could start hacking away at. I believe truly in hardware wallets. We offer all our members that join us, we send them for free a Ledger wallet. This is why I mentioned before that security is essential to the education on our platform. That's the first thing that you learn, how to be safe. There's all types of weirdos out there and scammers. We want to make sure that from ground zero, you're set up your computer in a safe way. You have your crypto wallet, and all assets on that crypto wallet are saved in a safe way. What do I mean by hardware wallet? It's literally a physical device that even though you have your crypto wallet set up on your browser so you can interact and purchase things and set up LPs, you have to additionally verify it physically with two buttons on something that looks like a USB stick in order to accept or confirm that request. So if you're going into an LP and you set up your funds and you're like, this is what I want to do, this is how much I want to put into this LP, then the signal goes to your hardware wallet and you physically have to interact with it. So despite the fact that your entire computer could be hacked, there could be a scammer looking at your computer saying, oh, this is good stuff. I'm just going to be transferring funds into my own crypto wallet. They can't do it. Because if you see a rogue request saying, hi, I'd like to transfer all my money from my crypto wallet to a foreign crypto wallet, you just say, no, you reject it. And that's it. But if you don't have a hardware wallet linked to that crypto wallet, to the Web3 wallet, There is no second step. It just basically executes. So this is why I'm a bit of a freak when it comes to hardware. I'll just unblur myself here. I don't know if I'm on blur. Here's one wallet. Here's the second wallet. This is the Trezor. This is the newest one. I'm really excited about this one. It's called the Trezor 7. It's quantum proof. It's crazy. So it has specialized firmware and hardware that basically can be updated by Trezor itself directly, which prevents any types of new potential vulnerabilities or hacks. So good stuff. Okay. If we join the first, okay, so Bryan answered that. How to convert into crypto. We have 3 minutes, my friends. I have another lecture starting. How to convert into crypto into DeFi. So basically, the path is bank sends money to a centralized exchange, Coinbase, Kraken, et cetera, et cetera. From there, you purchase digital assets, any types of digital assets, from Bitcoin to stable coins to ETH, et cetera, et cetera. And then from there, you send it to your own crypto wallet that is protected by the ledger, that is protected by that hardware wallet. And there you are in the decentralized space. Everything is free for you to access. So that's when you truly apply the education that we're presenting to you, where we describe differences between blockchains, which ones have attractive yields, why we should interact with one and not the other, et cetera, et cetera. Are native markets like an IPO market? Marlon, I believe I kind of explained that through my Kickstarter example. I hope that helped. Is there any person I can send him tokens he transferred to my account USDT 1 million? Well, surely you can send that to me. No. I'm not understanding the context of this question, my dear, but if you get any tokens out of the blue that says that you have 1 million, there is a very, very high probability that it is a scam token. I would definitely suggest not to interact with it, not to try to sell it or interact with it by setting it up in an LP or anything like that. What you have to do is, number one, check the contract address, scan it, what type of code is behind it, then investigate what the token actually represents, why you received it. Then you can even use a very cool tool. It's called breadcrumbs.io. Breadcrumbs.io basically is forensic investigation for the blockchain. So you can type in the address of that token that you've received, and it backtracks to the path of origin of where that token was created, who sent it, how much they sent, why they sent it, et cetera, et cetera. How much time do we need to learn before getting started? You don't need any time. We teach you from scratch. Literally, I mean, even we even created a step 0, how to use Zoom, what browser to choose, how your computer should be set up. Why is Chrome better than Edge? If there is a virus scanner that you have on your computer, is it a good one or a bad one? There are ones that really hog down on your resources, et cetera, et cetera. So step 0 goes through the absolute basics when it comes to technicals of using your computer. And then step 1 starts you off from square one. Thank you so much. You answered my questions. Thank you, Marta. What is the cost of the cheapest buy into the system? Yeah, if you go to the application, basically the membership director will give you all the information there fully transparently. They'll show you the tiers. They'll show you what differentiates between the tiers, etc. Can we choose our mentors as learning styles differ? Yes, you can. Great question. I love it. We have to adapt to your needs. And this is why from the slew of mentors, if you have one mentor appointed to you initially based on your own profile, what we feel could be a good fit, it doesn't mean that it's going to be a good fit forever or 100% that we were correct. So the good thing is that as you're going through the steps, you get exposure to every single mentor. Mentors teach at different steps. So as you're going through the steps, you're learning anyway, but now you're getting exposure from Rodrigo, from Juan, different styles, different ways to express themselves, different experiences. And if you feel someone is a little bit more aligned, yeah, you reach out directly to the mentor or to Anakin, the coach of all the mentors, and they'll make that change.
Yeah, and I know we're running out of time here, so I just want to touch on one last thing. If you guys want, you can reach out to your director or person you spoke to, or you can apply. And like I said, anyone that's hung out with us here for 2 hours, we appreciate it. So I'm going to give you an extra month of mentor access. But the question as far as like
Very
what's
sweet of
the
you.
cheapest cost to buy into the system, you know, we have a ton of free stuff you can get into, but at the end of the day, it's not about the cost, it's about the results. And you got to also think about it when you're investing, if you're investing 20, 50 or 100K of your own capital into the markets and you're looking for the cheapest education, a lot of times it's going to be far more costly because you're potentially putting all of that capital at risk. If you make bad decisions, bad investments, if you don't set up your security protocol. So it could cost a lot more money to not have the right education. And that doesn't also include the opportunity costs of not investing in the right investments if we see another, big upside move or the liquidity pools and how to do that properly. So speak to the membership director on the team. They can really kind of figure out what you're looking for, how much you're working with, I guess what type of goals and access is important to you. And they can really try to recommend what they feel would be the best program that's going to help you, in the way that's going to be most effective for you. We can't do that generally on these calls because everyone has different goals, different levels. So book a call with our team. Happy that you guys stuck with us for this long. Really enjoyed the questions. And, we're always here. Our team's here for you. So feel free to reach out to us if you ever need anything. Doc, any final words? I know you got to go. We kept you 3 more minutes.
I do have to go. No, I typed in a message, start without me. So yeah, they're good for now. But I just wanted to thank everybody for participating in this Q&A, for asking some fantastic questions, for being with us for the last 2 hours. I truly hope you found some value in what we presented here today. If you're interested, follow Bryan's advice here and click that link. And until next time, I wish you health and happiness. Bye-bye.